Hello, I'm Stephen Hammond with Christian Values Investing. Today we're going to take a look at a company called GameStop, and we're going to see if it will fit into our biblically responsible portfolio. Stay tuned. I'm here today with Grayson Shaw, and we're going to take a look at a company that has been all over the internet for for quite a long time. It's actually a store that I used to take my son to back years ago when he was growing up, when he went to go and wanted video games. I would take him to the mall here in the town that we live, and he would actually go into GameStop and actually look for video games. But I want to ask Grayson if he would kind of tell us a little bit about GameStop and exactly what they do so people will know a little bit about it. Just give us a description.
Yeah, well, first things first, I'll get you a little bit excited and tell you about some of the examples of people I found that got rich investing their life savings in it back in 2021. So we'll take a look. We've got Azrael Rodriguez, who turned $28,000 into $3.8 million. Kevin Sanzone, who turned $140,000 into $1.8 million. And Travis Martin, who put $38,000, his entire life savings, in the call options, and he turned that into $1.3 million over the course of 10 days. So we talk a lot about that sort of thing, about coming into money quickly, and that certainly embodies that. But anyway, a little bit about who they are and what they do. GameStop is a brick and mortar store, and they got their start in 1980 under a different name, and they turned into GameStop in 1999. And so they've been able to build up a lot of goodwill amongst especially younger people my age, maybe a little bit older, who grew up like your son, going to that store and buying Wii games or buying stuff for their Nintendo DS or even for their Xbox if they had parents that bought them an Xbox. But basically it's got a lot of goodwill, and over the course of the last 5, 6, 7, 8 years, the rise of buying video games online has led to a profitability decrease for GameStop. And so a lot of these big firms on Wall Street have been shorting their stock. And in 2019, 2020, there came an uprising, if you will, on Reddit and Twitter and other platforms like that. And a guy named Roaring Kitty, that's his nickname, decided he was going to kind of spearhead that. And also on Wall Street Bets on Reddit, people would go there and they would talk about how great GameStop was and how they were going to stick it to these hedge funds by buying it up so that they would hurt the big guy on Wall Street. So it's kind of like mob justice, like you see sometimes with different kinds of riots, but this time it's in the financial field.
Well, like you said, GameStop has been very, very volatile. I went back and looked at some historical data. And on January 4th, 2021, GameStop closed at $4.31. But just 26 days later, it closed at $120.75, which was the high for that year. But in just a few days later, in February the 19th, it dropped all the way back down to $10.15. But by March the 10th, it had climbed all the way back up to $87.13 was the high for that period. Now, you may look at it and ask, well, what industry group, what sector is this in? And if you look closely, you'll find out that it is in the retail consumer electric sector, and it actually has a very high beta. And beta is basically how much risk it has. So it's running at a beta a little bit above 2. So it's got a little bit more than double the risk with the stock market. And currently, the risk or the industry root rank on the GameStop is actually ranked 29th among industry group ranks, which is not bad because there are 197 industry groups that make up the Investor Business Daily. Now, you got sectors, you got industry groups. The sectors are not quite as wide. There's only 33 sectors that make up Investor Business Daily, but 197 industry groups. So rank number 29th is not bad. And you can think of it kind of like this. In the software industry, there's hardware, there's semiconductor, there's software and there's technology. But if you look at the actual industry group they're in, they're actually ranked number 2, only behind Best Buy, which is the number 1 retail electronics store listed. You look at its relative strength, it's ranked pretty high at the top 4% of all companies, but the earnings per share is not all that great. It's down in the almost dead in the middle. It's ranked 53rd. It doesn't pay any dividends. And if you look over here on Investors Business Daily, you'll see the alpha is 0.21. The beta is, right here is 2.07. And what that means is the alpha is actually if it's value added. So based on how much risk it takes compared to the beta, the higher the alpha, the better it would be. Beta means it's at 2.07, means it's a little more than 2 times riskier than the stock market. I want to show you a quick chart on GameStop. This is on Yahoo Finance. You can see right here that it actually peaked around May the 14th, and it went as high as $64. It came all the way back down here and went back over 40 here, but it's closed today at $24.70. Grayson, will you give us some more information on the fundamentals of GameStop?
Yeah, so they've had some profitability issues in the past, and their CEO Ryan Cohen has addressed that in their most recent conference with their board members. He said that they're focused on profits and not on the frenzy, something along those lines. Not on the hype is the word that he actually said. And what they were able to do is they've been able to utilize that hype both times that it's come up, both in 2021 and also this year, by issuing new stock and selling that and being able to add to their balance sheet. So in 2021, they were able to add $1.67 billion to their balance sheet just by selling an in-demand stock during that time. They were able to pay down a lot of their debt during that time period, and they were also able to add about $1 billion in cash just to be able to invest that. And they also were able to sell about 45 million shares in the last month or so, and they got about 993 million from that, so almost $1 billion as well. They have been struggling a little bit with their profitability. They had a pretty decent start to 2024, actually. They had earnings of $63.1 million, but it did drop back down in quarter number 2 to negative $32.3 million, which isn't really what you want to see. They had 2 not-so-great ones to end 2023 at minus $3.1 million and minus $2.8 million, respectively. And that's not what you want to see, especially for a company that's cyclical and says that they get most of their profits from the fourth quarter.
Grayson, what kind of news has come out lately? It seems like I read something about maybe issuing some new stock here in the next short term. What do you know about that?
Yeah, so I was looking at their 10K, and they can actually issue up to 1 billion shares of stock, and they've got something like 300 million out right now. So there's no real closeness to that maximum. And so what they've been using is like what I've been talking about. They'll see a time when their stock is in demand, and they'll create new shares and they'll sell it so that they can basically bring in a windfall for their company. I did see something about there possibly being another stock issue I'm not sure when that would happen, and I wouldn't put it past him if things keep going like they are, because there's a lot of sentiment on the internet about GameStop, and they've done it twice before.
What do you think? Because, so many, I think, people as they age, maybe they don't play video games, that type stuff as much, or if they do, it seems like a lot of them will go online and play it online rather than buying a game from a store. Do you think the company or the management would be able to adjust for that and somehow to be able to work it, or they can increase sales with maybe a declining type market?
I think that's really the question of their whole company at this point. And the guy that's really been promoting GameStop, the Roaring Kitty fella, he's the one that has said it first, and I believe he's right. Their balance sheet is okay, but if you invest in them at this point, it's really a bet on their management. Are they going to be able to invest in things that are going to bring in revenue? I mean, really, that's what it comes down to in a business. Are you going to be able to have revenue growth, and are you going to be able to spend less than you make? And it's like what we talk about in the ministry all the time. I'm a little bit skeptical that they're going to be able to do it. And my primary reason for that is just because of how things are right now. They've struggled so much in the late 2010s because of how things are, and then they got that big windfall of about $1 billion in 2021, and they just weren't able to do very much with it. They still struggled, and now there's a rush to buy GameStop again because they want to stick it to the rich. But I mean, they've still got to figure out something new. They've got to figure out a way that they're going to be profitable. And there are a lot of people that are smarter than me on that board, so maybe they can figure it out. But I'm skeptical about whether they'll be able to do it.
Well, it really, for us here at Christian Values Investing, we have fundamental guidelines that we go by if we're going to put a stock into one of our portfolios. And GameStop actually does not meet our fundamental analysis. So GameStop wouldn't be a company that we would invest in our biblically responsible portfolios. But also, Grayson, it also fails some of our negative screening criteria. So based on that, it would absolutely be a no-go for our biblically responsible investment portfolios. Until next time, God bless you.